Yo, what's going on? So, quick update on my trading. Um, we just closed the last week of January. We had FOMC this previous Wednesday, where I did trade FOMC. I traded Tuesday and Wednesday this week, and then no trades for Thursday and Friday. And pretty much Wednesday FOMC. Um, let's talk about a few trades that I took. And honestly, entering the first quarter, um, it's been a I would say the third and fourth and first quarter have been pretty decent for me. So um, just break down what I'm expecting from the market right now, and then break down the trade that I took where I essentially turned $300 into $2,600. So um, let's get to it. FOMC was Wednesday. So this was the opening of the market. This previous week we gapped here. Price came here, gave us a clean break and a retest of this structural level here, where I was interested in taking trades at this level here, but I was hoping we could have pulled back here and maybe rejected it some more before the push up. But as soon as market opened, we got a gap and then a push up. So I wasn't able to get in here. And then also I have my session tool here because I'm only looking to trade New York, London crossover, or just simply trade a New York session alone. So that would have led to the Tokyo session, which I didn't want to trade that session. And then um, that Monday price just pretty much bounced around in the range. And then the following day, which would have been here, we did get price come to the high of this range and breakout. This breakout candle here could have been an entry, but the only problem with this entry here would have been the stop loss placement. You're looking at almost 700 pips, and it wouldn't have made sense. Now, this is the 15 minute. I'm sure on the lower time frame, you could have got some type of entry confirmation, like here on the 15 minute. The only problem with the 15 minute is you had price come back into this resistance. So um, I guess you could have considered this a break and a retest here on the 15 minute. You could have entered right here after this candle. This candle closed here, took an entry, set your stops right under here. Now, on a higher time frame, you were looking at about a 700 pip loss, but on a lower time frame, anywhere between 175 to 250 would have pretty much been decent on gold. Because that's the thing about gold. When it comes to gold, you gotta have a higher stop loss placement because gold tends to move sporadically. Like gold will move 100 pips, 200 pips in one direction, and then go 800 pips to 1,000 pips in the next direction within a 10 to 15 minute time span. So we got to push out of this zone. We were in session, so this would have been a super clean trade to take. You could have took this trade. I didn't take this trade, but this was a super clean trade. And then it's pretty much where my trade began, which was right here, New York session. I had this zone marked up because we had price come out of that Tokyo session, create a high, and then we had a low for London, and then price pretty much came and respected this low that was created during London, and then we just bounced around this median. So I pretty much took a trade late Wednesday. FOMC was released around 1 o'clock. So what I did keep in mind was previous FOMC. I want to say December 10th. Before we moved into the direction, price spiked, and then we had a 1 day delay before price picked up direction. But because price was moving super clean, I was expecting for just a clean push to the upside, which we did get that. Um, right after that 1 a.m. candle close, which would have been right here. that's where I started to look for buys, and I did scalp. I had a few positions where I scalped. I would take profit, get out, and essentially I was able to turn. I want to say 350, roughly 350 into 2600, and I'll show a screenshot of that just so you guys can see. Let me see. Focus, focus, focus. So as you see, my deposit was 374, and then my profits was 2662, and I withdrew 2621, and I left 400, 500 on the account, and I did grow that 400 to 800, and then that's when things went on tilt for me, which was the previous day, which would have been Thursday. But that's neither here or there. I took the 374 to 2600, withdrew 2600, and just pretty much left a few dollars on there just to, keep the account with something on there, because I took I took all of the profits that I made Wednesday, and that's the thing about trading. I mean, you could pretty much make. I was able to do to turn that 300 and 2600 within a 10 to 15 minute time span. So that just goes to show the beauty of trading. It's not time based. It's more so knowledge based, technical based, fundamental based. It's about taking what you know and utilizing it, coming up with a strategy, and rinse, wash, and repeat. Now I did take a few trades in this area to this low. However, this right here would have been amazing if I would have caught this move right here. I mean, we talking about almost 4,000 pips. That would have been like next level for me right there. That would have closed my week super super in profit. I mean, we talking. I normally trade with a point .3, so if we do the math, three where's it, times 4,000. I mean, we looking at 12K. That would have been 12K in the bank. So just a lesson learned for me. Just stick to my session. Like I said, I stuck to my session the previous day. Everything played out, and then I traded Tokyo. I was looking for scalps within Tokyo, and I think I want to say I traded right here, and I got wicked out. So I was like, you know what? Just take my 2600 for the week and just be done. That was a profitable week for me. So everything's cool, but as of now, we currently in our last day of January. Today is Saturday, um, 3:19 in the morning, 3:19 a.m. Um, and my thoughts on gold is gold have came and completely annihilated uh, majority of the buying pressure that was here. So basically, what happened was you had buyers who stepped into the market at lower price range. You had like let's just say right here, for instance, or let's find where price consolidated the most at within all of this. That you had a bunch of buyers in this session, and then this area of the market who pretty much held price all the way up here and put a lot of money into gold within this area that pushed price all the way up. And then those buyers had the, I wouldn't say manipulate price, but those buyers had to mitigate some of their positions and get out and liquidate a bunch of their positions and take money out of the market. So if you was right here at 4,000 an ounce for gold, and then you got it all the way up to 6,000 ounces of gold times however many positions you had opening, and you liquidate a majority of that money, then that's what's going to cause these huge spikes in the market and cause price to push to the downside. Now, I do feel like price is going to find its bottom somewhere within this following week, but you never know. I would say the best thing to do right now is pretty much sit on your hands and let go, like play out, find this direction. I mean, of course, sellers is in the market right now. At the moment, a lot of people selling a bunch of their positions. They cap gold at 5,600, so that is our new high for gold, 5,600. And then what I want to see is price kind of move sideways. I want to see price like maybe find this low, move sideways. It's gonna trick a lot of people because it's not gonna really show a direction, but people gonna be expecting a direction, and that comes with psychology. And then I want to see maybe a push out of that zone, and then pull back and price find its way back up to the upside, or if we continue to keep pushing down to the downside, what I want to see is I want to see price maybe pull out, come back for a retest, and then I'll catch sales from this area on down to my next zone, which would be here. And that's pretty much my thoughts on gold. Um, and a lot of times, what I do is I will go on Forex Factory, and I'll look for high impact news. And whatever day the high impact news fall on, I will pretty much try to. I'm only looking at USD right now, so tripping. Nah, USD. Nah, red. I filter. So what I want to see is what days and the time of these high impact news, and pretty much make sure that while I'm trading, I'm keeping that in mind that because it's high impact news, we could see price just move sporadically in one direction. I'm talking about maybe 600-700 pips to the upside, and then right after that news event, price find this direction and maybe move to the downside to complete the overall trend. So I try to be mindful of news events. Other than that, I try to keep my trading as simple as possible and only focus on support and resistance, breaking retests. And that's pretty much just like the bread and butter of my trading strategy. It's mainly breaking retests. Like right here, this was a break and a retest. Um, right here was more so we had that resistance, we had that support, and we broke through. So support and resistance, breaking retest, those tend to work for me best when it comes to trading gold, and that's pretty much what I stick to. But yeah, that's it.